Happy Fed Day. Hope everybody's doing well. I'm Chad Anderson. That guy is Zach Jones. I made the joke with Zach before we started this recording that I simply should have started this show with me wearing a bandage wrap around my forehead and a sling and band-aids and black eyes. And I just, what a day this is. So for quick context, one, this is More Than Mortgage episode 42. Second is that today, as we're recording, is Fed Day. We're recording this late in the afternoon. We're about 3.5, almost 4 hours past the Fed chat and the meeting and the lowering of the Fed rate by 50 basis points. Jerome Powell, I didn't even see his comments. That's the kind of day it's been. I just saw that it was a 50 bip rate cut. But today is the day. So we're going to recap it. You're probably watching this on a Thursday or a Friday, a day later. But everybody, and I'm the unhinged one here. We've already decided this. Like, I'm the one that's the loose cannon today because it's one of those days, Zach, that you really start to question your sanity. And we have been talking about on this show, and I have been talking about at length on social media. But by the way, you can see all social media right here. Zach's right down there in his bottom left corner, mine right there in my bottom left corner. We have talked about how mortgage rates, one, are not Fed rates. Two, mortgage rates, we're not going to just wait and wait and wait. And then all of a sudden on September 18th, poof, mortgage rates start crashing down. The mortgage rates have been slowly trending in a positive direction. And that's what they were reacting to when the news came out that the Feds were going to lower their rate. But they don't wait until the day of and then just bottom out. Also, rates have come down, I would say on a national average, Zach, over the last month. What would you say? 3/8 in rate, maybe a half in rate?
Yeah, maybe a little bit more. Maybe a little
Maybe a
bit more.
half.
They're down 1.5% to 2% from where we were this time last year. Actually, in October, they peaked.
Yeah. So our whole point on all of this is that Fed Day has come and gone. As we're recording this, the markets are already closed. We're 15 minutes before the end of a work day on a central time zone. But the thing here is I posted it this morning on Facebook, said, Happy Fed Day. We know 25 bips are coming. What are mortgage rates going to do? They went up yesterday. They went up again today. And I made a comment. I think this was the best analogy I could come up with at the time, is that everybody thought this was Christmas morning. And really, they got handed a lump of coal. There's just a lot of disappointment. I've talked to customer after customer after customer today, and I tell you, Zach, the biggest struggle I've had, and then I'll let you kind of give your recap of how today has gone for you. I've had people texting me, "Oh, what have rates done? Oh, well, I heard rates did this. Oh, I heard rates did that. What does this mean for my rate?" I had one person sitting at a closing calling me because the Fed rate. Like, those are the conversations, and just over and over and over. And I think that the really hard part was just, I guess, empathizing with them, because you don't want to be the "I told you so" guy. But so you have to have some empathy, and you have to kind of talk them back off the ledge. I think there's a lot of people who are feeling pretty dejected today because they kept waiting and waiting and waiting for this magical interest rate drop. And so I've actually spent a lot of the day calming customers down, and then also talking to customers who were on the fence about doing something, and then explaining, hey, don't let today deter you from a decision over the next couple of weeks, because you got to look at the big picture.
Right.
So it's been a very, very volatile type day. Lots of emotion, lots of questions, lots of misinformation, misunderstanding. The news media hasn't helped us out really at all today. What's it been like for you?
Well, a lot of the same, texts from people who, blast from the past, folks who closed late last year, obviously, other folks that I've already been in contact with that were kind of ready and poised to do, pull the trigger on a refinance. But my sense is that we're going to continue to go down here for a little bit, even into the end of the year. We're expecting another rate cut, which will be baked into mortgage rates over the next 5 weeks. It's not
Really?
going to happen.
I want to ask you that real quick. So we've talked about for a month now how today's cut was already baked in. Like
Right.
we saw that. Is it possible that the next cut is also already baked in? Because we've had a pretty decent, drop or relief. It just hasn't been all in one day. It hasn't been the
Right.
giant drop in one day. It's been the slow bleed in our favor. Do you really think that we're going to see more, or could that potentially also be baked in already?
Personally, I believe that there's another recipe going into the oven for the next Fed rate cut, or the next Fed meeting, which is the 6th and 7th of November. So right after the election. And the reason that I believe that, Chad, because I'm on board with you that we've already seen maybe more than what we would have expected. I'm looking at rates. I'm like, man, it just kind of keeps getting better, keeps getting better, keeps getting better. But I was also up until Friday looking at 0.25% Fed rate cut, and they kind of shifted the projections on us over the weekend. And so we continued
Yeah,
to see that decline
we
as
did.
we moved into a greater chance of this 0.5 point rate cut, which is 50 bips. That's the language that you'll hear interchangeably. So I think we got a better cut this time simply because we went from a quarter to a half. And it'll likely be a quarter again next time unless we have devastating jobs reports, which I don't think we're going to see any bad language about jobs, true or false, before November the 6th, because we got to be at the polls on November the 2nd or 3rd. We're not going to have bad news. It's all going to be rainbows and unicorns, I think, from here out as far as that is concerned. But the Fed also tries to separate themselves a little bit. They need this. I think the Fed is late to the game. Personally, we should have been
Yeah,
seeing these
I do
cuts a
too.
little bit earlier. So they're delayed. We're
But
we're gonna
but didn't they postpone the cuts because all the numbers were fake?
well, and the
Right.
election and the insert
Right.
reason here. I don't know how many reasons we can come up with for why the Fed is late to the game on these rate cuts. But what I will say, here's the silver lining to all this, because it is a frustrating day in the mortgage business when you've been really dedicated to setting good expectations and helping people understand. And then there's this shocking, hey, what happened to my mortgage rate today? Can I change it? The good news is that this is the first Fed rate cut in months and months and months and months and months and months and months. We've been going up or staying steady. I don't even know when that rise started. I can't recall that in my brain about when we went from, we were treading water at the lowest and then they started raising them to control inflation. But we have officially turned the corner. That's the silver lining to all this. And it's a silver lining to mortgage rates, but it's not necessarily great for the rest of the economy and those economic indicators. So the magic moving forward is how do you manage monetary policy at the Fed and policy at the government level with regulation,
Yeah.
and balance those two things together so we don't go into a recession, but we also don't go into inflation, and we ride, you know, a little swell. It's not a wave. It needs to be a swell of prosperity and good policy so that we can get back on our feet, create more affordability, bring wages up, all of the things that contribute to a great economy.
Well, and I've been telling this. I'd love to know your opinion on it. I don't mind. Or I'm sorry. I don't want to be political ever when I'm talking to customers, because politics should have really no bearing on my conversation with a customer. But I do talk about strategy and what does the
Right.
current administration and government want to happen. Not oh, let me bash Kamala, let me bash Biden, or let me bash Trump and let me bash Vance. Like, that's not the point. It's more, hey, here's what Kamala and Waltz are going to do because it's going to benefit them and what they're trying to accomplish and getting, elected. This is what the Republicans are going to spin if it happens and what they're going to say. And we got to figure out, who's pulling the strings and who is sitting here wanting what to happen and, who's going to benefit and the old follow the money, right? That's
Right.
kind of the old adage, follow the money. Well, same for Jerome Powell. Like Jerome Powell, he and Trump don't get along. Last I heard, they don't get along. So Powell is going to want, the Democrats, Harris and Walz, to look extremely good because he doesn't want to lose a seat and he doesn't want to get into it with the next administration if it is the Republican side. So you have to keep those things in mind a little bit on, I don't care who you are and what you say, personal agendas are going to always be in the back of someone's mind, no matter what position they're in.
Right.
How is this going to help me, hurt me, etc.? In the meanwhile, the current administration, they're having discussions and they're going, hey, if you do this, well, this could make us look bad. So how do we spin this to look good?
Right.
And that's the struggle that we're kind of in. So I'm curious if you're on the Democratic ticket right now, how do you spin certain things? Because you're going to say, hey, look, we got inflation under control. We cut the rate 50 basis points because look at how great we did with inflation. Trump's camp is going to say, oh, we're headed straight for a recession, full steam ahead, train's not stopping, recession's coming. The flip side for the Democrats again is, oh, look, we got the Fed rate down. It's been helping. It's not a direct, it's not a dollar for dollar or bip for bip, but inflation coming down has eased up mortgage rates. Now housing is more affordable. Now you're able to refinance. We're saving people money here. So in your opinion, which one of the many, many levers seems to be most important going into the election?
So let's make some assumptions because I can't say that any of this is true. But if the current administration, and I'm not going to assign red or blue to it, if the current administration is in a position to manipulate Fed policy or the appearance of what the Fed is doing.
Let's use influence. I don't like
okay.
Let's use influence. How about that?
Well,
I know what you mean. I just don't want anybody it's not an attack.
This is an if. This is an if. So I'm not saying that this happens, but it would make sense to me that the current administration take a position of really boosting this rate cut up and saying we've inflation is under control, everything's fine, we're on our way to whatever the slogan is, build back better or new way forward or all of the things, right? It's all the slogans. We're on our way. Look at the trajectory. This is awesome. And they could even go so far if there was a nefarious or sinister manipulation going on behind the scenes, they could even make that look, even maybe potentially do damage to the economy by pushing it further. Okay. Because after November, the 2nd or 3rd, or whenever the election happens, the consequences don't matter. It's about everything that we do moving up to that. So if the current administration manipulated things in a potentially even slightly dangerous way, and it kind of falls apart after the election, they won. And it's a win. It doesn't matter. It's in the W column. If the other team wins, then it doesn't matter either because they took their best shot and they can clean up the mess. Those other guys can clean up the mess.
Yeah, so you can blame the next guy, right?
Yeah, there's not any real downside for influencing or manipulating or spinning or polishing things up in a way to benefit you. And so that's where I think that's where we all have to be cautious and kind of read the tea leaves ourselves and make sure that we're trying to understand that, and also not to fall prey to all this posturing that's going on, because it's really hard to sift out the truth on either side about anything that goes on. And you're certainly not going, it's been my experience that you're not going to get that in the mainstream messages that are put out there. I feel like I've got to go to the obscure corners of the internet and try to filter out all the kooks and see if there's a nugget of truth in that hidden away in that corner that I can consume. So projections are really weird, but the Fed is really pretty firm. They've established this position that, hey, we're going to continue to cut rates as long as the numbers come in correct, that we've got inflation under control, and we've got a at least a flat economy. But it really is, Chad, I gotta believe that we are in a recessive economy, not a recession, but we're in a recessive economy. It's contracting. And I base that primarily on what I see about jobs when you dig into those numbers in the background. So it's always our conundrum in the mortgage industry, right? Rates
Yeah.
get good when the news is bad, when conditions are bad. And
Right.
that's not always the case, but it is usually the case. And so we've got to get some bad news in this economy for these rates to continue to trend down. And then when they balance out, whatever that number is, is it, I did a piece this morning, is our rates supposed to temper at 4.5 for a conventional 30-year fixed, or 5 or 5.25? We don't even know what that number looks like. So
Yeah.
it's going to be a kind of a rocky road. And again, back to this piece of content that I produced this morning, timing the market, you are not going to be able to do it. I probably can say that I timed the market perfectly once. I've timed it well a couple of times, but all that comes from not a massive wellspring of skill. It's pretty much dumb luck. And it's like, oh crap, I need to move, and I need to move quick, and then I'm ready.
Yeah.
Yeah.
Here's the thing about timing the market, guys. If I was able to time the market, one, I'd be the richest loan officer in the entire country,
Well,
because
you
I could
wouldn't be a
go.
loan officer anymore. You'd be
I
on
would
the
know.
Caribbean island.
Yeah, I'd be in Switzerland just chilling, and with all my private safe bank accounts, and
Yeah.
just trading on the markets, and I
They'd be inviting you to Davos.
yeah,
That's where
exactly.
you'd be. You'd be in Davos once a year at the World Economic Forum.
Warren Buffett would wear Chad Anderson pajamas if that was the case. It would be amazing if I could time the market. I
Instead
wouldn't
of
be
the other way around.
recording this.
Did you just tell us that you wear Warren Buffett pajamas, Chad? That's weird.
It is weird, isn't it? But no, I don't. So that's the whole thing with a lot of this, is that it's all, nobody truly knows, and you just have to take. Again, we've mentioned this on a previous episode, that when others are selling, you're buying, and when others are buying, you're selling. I mean, that's kind of the whole thing, and it's just funny how days like today, it never fails. The whole world is just jonesing for the rate drop today.
Good
And on the
news.
mortgage side, yeah,
Yeah.
on the mortgage side, things went up. So, yeah, here's the rest of it too. I want to go over a few things that, and this is just honest truth. And I have a lot of fun a lot of times at consumer expense on social media, but it's more just a way for us to get through our day, because the poor consumers, okay, I feel bad for 97% of them. The reason I do is because society has failed consumers. It's insane. It's still insane. I will preach this until I die. It is insane that nobody in society knows what the Fed rate is compared to mortgage rates.
Right.
People don't understand it. It's insane. It's insane that people don't understand how mortgages truly work. It's insane that people don't understand how escrow accounts work, how investment accounts work. It's so crazy that you start to question. I hate to sound like a conspiracy guy here, but you start to question, why is this stuff not taught in high school?
Right.
They teach you home ec, like they teach you how to do things around the house, but they don't teach you how to gain wealth. They don't teach you how to better yourself,
Like
not
they
from an
don't want you
education
to know that, right?
Right.
Yep.
It's really crazy to me that, if you think about this, the largest asset you will ever own, hopefully at some point in your life, is a home. And you know pretty much nothing about it, zero about it. And you have to go rely on a mortgage person to basically walk you through it from start to finish.
Right.
Then the other one is, how does no one get taught how to file taxes? They try to push you
Right.
towards an accountant or TurboTax or H&R Block or so forth. Oh, don't worry
Complicate the
about
code.
don't worry about all these little loopholes in the
Right.
code that the government wrote for themselves. Simply focus on the fact that, here's your income, here's the tax that you owe, and here's everything you're going to pay into it with your Social Security, your FICA, your Medicare, all that good stuff. And here you go. And that's how we're going to do it. So those kinds of things just drive me nuts. And that's why it's not fair to have fun at a consumer's expense. But days like today, you really can't help it. So a couple of things just for, if you've made it this far in the show, these are brutal truths. Okay. One is when you lock in a rate, you've locked in a rate. I don't call people and say, hey, rates went up today. I could actually make a little more money on you. So can we go ahead and float you up? No.
Right.
we don't call you to float up. Well, we also don't just call people to start floating down. Think of it this way. What would be the point of locking an interest rate if we were just going to simply say it's free for all? You're
If it was
guaranteed the
still
lowest
flexible,
rate.
right? Yeah.
Yeah. You're guaranteed the lowest rate the market gives inside of the 20 or 30-day window that you're purchasing or refinancing. Like, that's not real. That's not reality. It's not how things work. So, yes, there are times, but it's not a guarantee. There are times when a renegotiation can take place, but if you get a quote float down, you can't float down because the market improved by $300. I'm not talking about per month. I'm talking about the interest rate you have got better by $300. I'm
It
talking,
has to be a significant swing
yeah,
in order
a
to even
major
start a renegotiation
a major swing,
Yeah.
correct. And companies
in a
work
short
off
period of time.
profit. Yes, in a short period of time. So that's the biggest one that we see a lot. The other is that when you do the Fed rate and the mortgage rates, it's just the best way to describe it, keeping it simple, surface level. It's apples and oranges. Yes, mortgage rates have some sort of movement, or they're impacted to a certain degree by Fed rates, but apparently there have been people today who were locked in at, for example, 6%, and they call up and say, hey, I want 5.5 because the Fed's cut it half a point. Not how it works. It
Right.
just isn't. So a couple of those things, like I feel like they're myths, and people like just kind of assume that these things take place. The last one, and then if you've got any to add, Zach, from personal experience, is if your rate is expiring. Let's say that you're closing today and your rate lock is good through today. People say, well, I'll just let the rate expire and go talk to the seller and say, hey, give me an extra day to close and we'll just close tomorrow and I'll get the new rate.
We lock a new rate in the morning and close in the afternoon. Well, that'd be
Not how
slick.
it works. Not how it works. If you lock in a rate and that rate expires, you have to wait 30 days before the new rate can be locked in. Now, you can lock in a new rate the next day, but you're going to get what's called worst case pricing,
Right.
which means you're going to take the worst of either the rate you had originally or the new rate. So if rates got better, you're still going to get the old rate and it's going to cost you money. The only way to get the so-called market rate, meaning the updated rate, is you have to wait 30 days. And then on the 30th or the 31st day, you're then subject to whatever the new rate is. So those are just, like I said, tidbits. You're not taught that stuff and it's extremely frustrating. Do you have any others that you run into, Zach, to add to
Man,
those?
that's a good summary. I think that the in very basic terms, there's not any way to game the system. This is
Right. Yeah,
the
there's
mortgage
no
lending.
loophole.
Yeah, mortgage lending it's a financial services industry, and so there's all kinds of things that go on behind the scenes, and a general consumer can't know that there's costs for hedging loans, and all of the things that go on back behind the scenes in the way that money's handled. But you got to think about it like most people would understand that if this is a good comparison for the Fed rate and mortgage rates. Hey, I saw calling your stockbroker and saying, hey, I saw that Coca-Cola went up today. I'm going to sell my Pepsi stock and make a profit.
Right.
Not related.
Right.
They're both beverages, but it's two different companies. And so that's what I say about interest rates is that they're very
That's a
distant
great
cousins.
one.
Yeah.
Yeah.
And
That's
so there's a lot of things that you can think about with the stock market that make sense because it's a more kind of a practical buy and sell situation that really does apply in mortgage because we're buying and selling money. And so, you can't, we would all love to buy Bitcoin at $100 a share, right? But we
yeah.
can't, we don't have a time machine. So we can't go back there and do that. And if it went up today, we can't go back and buy at yesterday's prices, even if it's not $100. Even if if I'm only making 17 cents, if I can do that enough, I could, get on my Caribbean island. But those things just don't exist. So the very best advice that I can give is to associate yourself with an expert mortgage lender because they're going to be able to advise you on all of the things that we've talked about today and help to educate you a little bit to say, when you accidentally or unknowingly or naively say, well, hey, I'm going to wait until the next Fed meeting on November the 6th because I hear that they're going down 0.25% and then we'll lock. Think about this because the savvy mortgage guy is going to say, no, 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 no. Don't wait until after the election to put stock in the fantasy of a rate cut because the rate cut will already be baked in 2 weeks before that ever happens, and the election could completely throw a monkey into the gears. What if we're in a situation where they're rioting in the streets because 70 million votes were lost by the Dominion voting system? That's not going to be good for mortgage rates because what's going to happen is everything's going to shut down and you're not going to be able to lock.
Yep.
So you've got to apply some practicality to it. And that's really what we're here for, because you can't know this. You don't work in it every day, but you need to hire somebody who's expert, not somebody in a call center, not somebody who's, advertising the lowest bargain basement rates in Bangladesh. You need to get
You love
yourself.
Bangladesh.
I like to say it because it's a fun place to say, and it creates a mental image. And
Yeah.
I think that guy in Bangladesh doesn't really know anything about American mortgages, so I'm going to pick on him.
He's going to sell you a car warranty, though.
So that's the best advice. Put some practicality to it, and if you have a question, ask it before. See, I think that the worst part of having a day of response like this to me is that it means that people weren't ready. They weren't educated ahead of time, so they're reactive. I had literally, this is one of the stories that happened to me today. What's going on? Where would our rates be? And this was a person who really needed to do some credit repair. They bought a house back in January, so they were really kind of at the high end of rates. They needed to do some credit repair. They were in a real mess, but we did find a loan for them. And I said, well, how is the credit repair going? Let me know what's going on and where your score is. And she was like, oh, well, we're just now starting to get around to that. So they're probably in a situation where we may not even be able to find a rate for them again because we just barely squeaked them in to a mortgage loan before. So they're not ready. And that's the thing that, golly, it gets me, because for the improvement of about 30 points in a score, they could be saving about, I think I ran at $411 a month. And we could have locked that today and put it together, but they didn't get to work on it. And so, they're just now starting. And I said, well, listen, put the $400 as a carrot on a stick, use that for a motivator, and maybe we'll be ready in February or April or June of next year.
Yeah. Yeah. I had the same conversation, saving somebody around $320 a month. And the answer was, I was hoping to save 500. And I think consumers as well need to understand, like, hey, sometimes the math isn't possible. And in order to save that person $500 a month, the interest rate would have to be around 4%. We are a long way from 4%.
If
Really long.
ever.
If ever. We are
Yeah.
a long way from there.
We might be a decade and a half. We might be 15 years from 4.5.
Yeah.
You don't know.
you also, that's what's so funny, I think, a lot of times too, is when we you can hear my emails. I apologize for that, but like you can just I just ding all day. What a
Everybody got
day.
home from work, and it's time for Chad to go to work.
I guess so. Yeah. So that's the other one, is that it's funny how human brains work, right? I'm not even talking about just mortgages here, because we say we're not greedy, but also we are greedy. And we have even a worse
Inherently.
thing. We all have a worse thing that is built and wired inside of us, and that is FOMO. We have FOMO. No matter
Yep.
what you want to call it, no matter what you want to admit or say, we all have FOMO. Some have it to a higher degree than others. But when you say, I want to save $400 a month, well, what if a month from now you can only save 250 instead of 320? Now you're thinking, oh my God, do I cut my losses? Do I just
Right.
chalk it up and go back and get my, what do I do?
No, I'm
Maybe,
gonna wait.
yeah,
Yeah.
no, I'm just going to keep
Yeah.
waiting now. I'm just going to
Right.
keep waiting. One day
Yeah.
it'll come back. One day it'll
Right.
come back. And we run into that quite a bit. People who bought houses a year ago and they were angry that it was 7.5, 8% for mortgage rates. And now today you can get into the fives, and that's not good enough anymore.
Right.
But a year ago, it was, having a coronary over the fact that you couldn't get anything better than 7.5%.
And you would have killed for 5.25, but
Y-
the only response today is, "Hey, I heard rates are down at 5.25. Do you think they're going to go to 4.75?"
Yeah.
I mean, it's that inherent greediness, right? We always want more.
We always want more, and it's just the FOMO, because we don't want our neighbor or our friend or our relative or our colleague to end up with a better rate than what we have, because we want to go brag about it. We want to make
Right.
sure we got the best deal. You're never going to get the best deal. You're just never going to sell at the highest high and buy at the lowest low. That's just the way the world works. And so you also have to think, if you can discard FOMO, Zach, I'm going to wrap it up with this. If you discard FOMO, I talked to some people on Monday. Said, hey, what do you want to do? I really didn't know that rates were going to get worse on Tuesday, but I had a suspicion that Wednesday they could actually end up going higher, contrary to a lot of other people. So if I'm talking to people Monday and Tuesday, hey, you want to go ahead and lock in? Because I don't know what's going to happen on Wednesday. If it's 25 bip cut, I think rates are going up for sure. If it's
Mhm.
50, I don't know. But, you know, what I think the risk here is much greater than the reward is, my opinion, for this week. Every single person said, nope, just
Gonna
wait
wait.
till Wednesday. Wait till
Yeah.
Wednesday. Wait till when. But kind of like you said, I don't have a time machine. Now I
Right.
can't go back to Monday to get Monday's rate. Rates over the last 2 days have gotten worse by about a 1/4%. What that means is not the rate. What that means is that if somebody offered you 5.9% on Monday with no points, 5.9% today would cost a 1/4 point of your loan amount. So a $400,000 loan, it would cost you an extra $1,000 because you waited the 2 days. So in essence, you went to a mortgage casino and you placed a bet and you lost $1,000,
Right.
is essentially what happened.
Good way to play it.
The other way to look at it is, you place the bet, you don't have to pay the $1,000, but you do now have to take a 6.1 instead of a 5.9, which results
Right.
in a payment of $35 a month higher, something like that.
Yeah.
So that's the risk reward. But my point is, if you're happy with the rate, or I'm sorry, if you're happy with the payment, just know that going down an eighth, obviously loan amount's going to dictate the amount of savings, but on average, going down an eighth is going to be $30 a month. Going up an eighth is going to be $30 a month. So what are you really stressing over? I mean, are we really like down to the, oh my God, the $30 a month is going to make or break life?
Right.
So just another thing to consider and think about. But what a day. Final thought. Do you have one? Or I'm ready to go to bed. But
Hire an expert. Get yourself associated with an expert consultant that can help you talk through these things. And I'm again, Chad, you've done a good job in wrapping this up. To the things that are inherent to all of us, that get in our way is that inherent greed, the FOMO, the false optimism. Because that last piece that you put in there is this hope against hope. We're kind of in this magical thinking thing as a society. It's like, oh, we'll just take a crumb of anything better. The first thing that comes along that somebody tells me is going to be great.
Yeah.
Don't fall prey to that. Let's take a look at reality. And 400 is better than 375 or 320 as improvement on a loan. And if it gets substantially better, we can always do another refinance. But you're gambling against that stuff. And I guess I have some good practical life experience where I've lost doing that false hope gambling stuff. And so it just doesn't appeal to me, and it doesn't mean I don't fall prey to it every once in a while, but man, the flags go up. I'm like, I know exactly what I'm doing. I'm just hoping on this one,
That's a great one, because so many times deep down, you probably know what you're being told is wrong, but you want it to be true so badly that you can't help yourself but to follow. And you end up with disappointment. I mean, it's almost, you're standing outside and somebody says the sun is going to turn blue in an hour, and you just keep waiting. You keep waiting and you keep waiting, and it never happens, and you're disappointed and you lost the hour.
So you got to channel your inner Spock.
Yeah,
Put the rational out there as the only thing to be considered, and roll with that.
That's it.
And I'm right. So one of the things, I'll leave you with this. One of the things that my dad used to say at dinner time is grab it and growl. That was kind of a little funny saying he used to say. That's my philosophy about rates. If you like it, you like the payment, like the rate, you're satisfied with it, grab it and growl, and don't look back, because you're not a genius if it goes up, and you're not a loser if it goes down. You just locked a rate on a day, and it's a rate. That's all.
That's all it was. All right, guys, that's the social medias. Make sure you visit, like, subscribe, download, share, comment, DM, whatever you can do. Hope you're enjoying. I mean, it's 42 episodes. Hard to believe that we're just a couple of months from a year into this.
Coming up on it.
Yeah. So we do appreciate everybody hanging out with us, commenting and sharing and kind of giving us some feedback offline. It's honestly inspiring and cool to see, and it helps us when we get those messages, because it makes it worth it, and to know that people are enjoying it and reaching out and whatnot. So give us a follow as well. Mine's right here, Mortgage Dad Chad, that guy over there, Zach Jones Loans. Again, any of these up here, you find us, and we appreciate you hanging out. So for Zach, I'm Chad. Have a great one. Don't freak out about the rates. Still hoping for a downward trend, but this is a bump in the road. And, we'll see what happens as we approach the election here in just about 7 or so weeks, something like that. So
it's going to be fine. It's going to be fine.
It's going to be okay.
Serenity now.
Have a great rest of the week. We'll see you later.